What's going on, guys? Jake Nicolle here. Welcome to today's latest update on the market. It is April 3rd, I believe, and we are reflecting on the month at hand, which is March. So we're looking at all of March's stats, and some of you might be wondering, where are things going right now? Because the market, as we're about to see here on my computer, the market's climbing up. Now, I have so many thoughts about this, but what we're gonna do today is we're gonna start by just looking at the statistics, seeing where the market's at, and then from there, we'll engage in a little bit more of a conversation of my crystal ball predictions on where I think the market's going, okay? So step one, here we can see, checking this out, the market is up from 723 in January to 757 as an average in February to now that March is done, 778. So to give you some perspective, that 778 number is similar to about July. As you can see, July was also 77.8 of 2022. Okay, so we're back to kind of like July's numbers. Now, we're still way off that peak of the market, which was all the way back in February. And the way that I would interpret this personally at this moment is it's spring. And what happens in spring is as sales are ramping up, where there's more houses being listed, buyers are kind of coming out of hibernation, they want to go buy stuff, you get a little bit more activity happening. And the thing to remember is that our market here in the GTA, think about it like the flat line, just kind of the base level foundation of the market here in the GTA is that it is always a supply demand problem, creating the perfect ingredients for a seller's market. Like almost at all times, you've got very, very many buyers here in the GTA with very few homes for sale. And that number of buyers just keeps increasing because people are immigrating into Southern Ontario all the time. And as they immigrate in, they come with their families, they come with friends, they want to buy houses, and there's a limited supply of homes because homes here in the GTA just aren't being built fast enough. But you know this, you hear the news highlights, you hear what's going on, there's too much red tape, we're not building homes quick enough, and that causes us to have this increasing problem with supply and demand. So remember, that's the undercurrent of the market. Now, the factors that get added on top of that will cause things to shift and change. Things like interest rates, then things like the global economy, where last month, we had SVB, Silicon Valley Bank, we had them fail and actually be in a situation where there's a bunch of people running in to go pull their money out because SVB is having an issue with having too much debt. They're carrying all these bonds. They're trying to offload some of that. Investors get weary. And as investors get weary, consumers get really scared and run and pull their money out of the bank. And then the bank has no more money left. So this has caused a bunch of bank failures everywhere. And it's created an economic situation where now we're like, maybe we should slow raising interest rates a bit if it's going to continue to cause bank issues. And then as soon as you slow interest rates, buyers are now like,
oh my gosh, maybe we missed the bottom of the market, let's run out and buy.
So my prediction is we're at a bit of a place right now where I think this could be a little bit of a dead cat bounce, which in investors' terms means the market appears to be heating up, but it might still be on the way back down. Or we could be in a situation where if buyer sentiment remains like now's the time to go buy, and they keep buying houses, it almost doesn't matter what the rest of the economy is saying right now. While I think we have a situation where we need a recession to kind of reset the inflation that's become a runaway train, it doesn't matter if buyers are optimistic and willing to just take on tons of debt right now. So we'll see what happens. So that is the quick summary of me looking at these stats, trying to interpret where are things headed, okay? If we look at the number of new listings, you can see like clockwork, like I've been saying in every one of these videos for the last several months, we can see that March is kind of that point, middle, and this was COVID this month here, okay, where you see March is actually the peak of new listings. We can see over here, March was a high point in 2020, and then our listings still shot up in June. But this was COVID recovery 2021, okay? Every other year, March is like the middle of when new listings are hitting the market. We can see over here in 2018 as well. And if I zoom out even further, we go all the way back to like 2015, you can see every year, March is this like middle of the road in terms of new listings, new inventory hitting the market. And that's also true in this homes for sale graph. We can see every year, like clockwork, March is about half of the volume of homes that end up being for sale. Okay, you guys seeing that? It's like clockwork. So what that means is we still have a ton of new listings in April this month and in May next month, where we're gonna see lots of houses hitting the market for sale. And the question is gonna be, what is going to be the demand from buyers? Are buyers gonna remain optimistic right now and think they missed the bottom and all rush in to buy houses and create that low inventory market that's simmering, are they gonna exacerbate it? Or is what's gonna happen that maybe the Bank of Canada will continue raising interest rates, which they need to fight inflation, they just don't want banks to fail. So if they keep raising interest rates, maybe buyer sentiment will cool off a little bit again. And then even the fact that we've got that simmering supply-demand problem is overpowered by the fact that right now buyers start to get scared and stop buying so aggressively. To be determined. We don't know just yet. But I'm just reminding you that the new listing and the homes for sale, that happens like clockwork every year in the spring, okay? March is like the middle of the road. April, May are the height of new homes hitting the market, the height of inventory, which just to kind of drive that point home, right here you can see homes for sale is May, right? May. It's like peaking in June a little bit, and that's because over the summer, that supply starts to actually add up a little bit. Buyers are buying really heavily. February, March, April, May, and then in the summer months, the buying cools off a little bit so that home inventory stacks up a bit, and then it cools off heading into the fall, okay? And then we can see sales volume is up. So sales are rebounding. There's lots of sales happening now, which by the way, that happens every year around this time. Okay, if you see me go back, March, tons of sales happening. March, tons of sales happening every single year, okay? So other trends that we're noticing, days on the market, falling off of a cliff right now. Days on the market went from in January being 28 days average to February being 19 days. Sorry, this is the median. So let me click on the average. Same thing, you can see it falling off a cliff. We went from 41 days in January, we're down to 30 days on average now, with the median looking more like 16 days on the market, okay? So it's good to keep those things in mind, and that's because some sellers still have unrealistic expectations, and they're sitting on the market for 60, 90 days, while other sellers are nailing their price points, and they're on the market for a week, 2 weeks, okay? And that's pulling that average to about 30, but you can see there in the middle with the median, it's more like 16 days, okay? So month supply, all right, it's still fairly high. We still have 3 months supply of homes. My interpretation of that is we still have people not yet figuring out exactly what price they should be listed at. And then this one is the last one we'll check out right now, which is the percent of original price. Let that load here. I'll have to edit this out. Percent of list price. And what this is showing us is that right now, we went from December being the low point of like 96%, roughly 97% of the list price is what things were selling for. Today on average, 99%. So that should help inform you that when you're looking at properties, you know that right now on average today, you're probably gonna be in and around list price. And remember, there's people that are overpriced, so it's like this is where the average can be tricky, and this is where you giving me a phone call right now so I can help you determine and dictate which properties you should be paying attention to is gonna be super helpful. Hope you're enjoying this deep dive into market stats where we just really talk about the trends, pay attention to what's going on, remind you that this business is incredibly seasonal. People make decisions to move in the spring, they cool off over the summer, okay, there's a little bit of a kick in the fall. It's just remembering that there's multiple things that are being staggered on top of the fact that we have an environment that is almost always a seller's market here in the GTA with a huge supply and demand problem. And then we're sprinkling in these other factors. What's going on with interest rates and inflation? What's going on with buyer sentiment is probably the biggest thing. What time of the year is it? All these things matter and they dictate the market. So hope you enjoyed today's video. Drop a comment below. What do you think about the market? Where do you think that it's headed? I want to hear. I'd love to engage. You drop a comment below. I'll respond for sure. And I'm looking forward to chatting with you guys. If you have any questions you want to reach out, text me right now. Say, hey Jake, 289-216-6852, or feel free to pick up the phone and give me a call. And if the line's busy, please call again. Hope you guys have a great day. Cheers.